What's up, family? It's Coach Massey, and you're locked into the Daily Hodl for August 9th, 2025. Today, we're going deep into the state of Bitcoin and the broader financial picture because we're stepping into a window that historically has been one of the most exciting and volatile times in Bitcoin's life cycle. But this cycle, it feels different because it is. Or maybe it's not. Why? Because we are now just weeks away from what's historically been the blast-off window. If you've been in Bitcoin for a while, you know the pattern. In the past cycles, we get to about 500 days or so after the halving. We've seen what's called a parabolic blow-off top, just that hockey stick up. This is when Bitcoin can literally double in just weeks. And if you've been in it, you made a lot of money. It's happened before, and traders and investors alike have been watching the calendar waiting for this moment. But here's the twist. This cycle is not lining up perfectly with the history books. It's definitely different. But let's break it down as to why. Historically, the halving has been a huge catalyst. Cutting the supply of new Bitcoin in half has always been a shock to the market. Fewer coins are coming in, same or higher demand, and boom, prices rip. Even the CEO of Bitwise, Matt Hogan, points out that the effect of halving is getting weaker over time. Even Michael Saylor says that. And you see that this time around. Now, back in the early days, those supply cuts, they were massive. In 2028, when we hit the next halving, we'll be going from 3.125 Bitcoin per block to about 1.5 Bitcoin per block. That's a much smaller change in new supply compared to the first few halvings when we were cutting from 50 Bitcoin down to 25. Then from 25 down to 12.5, and so on. The law of diminishing returns is starting to show up here. So what does that mean? It means this cycle is being shaped less by simple supply shocks and more by long-term structural forces. I'm talking about institutional adoption, massive. What do we have? Companies. What do we have? Hedge funds. What do we have? Pension funds. What do we have? States. We have other governments. We have our government stepping in. I'm talking about a regulatory environment that, while still complicated, is trending in a friendlier direction for Bitcoin and really all crypto in general, but I'm a Bitcoin guy. These are decade-long forces that change the game and potentially break the old cycle rules to what we've gotten used to. So here's the timeline. That blast-off window that I talked about earlier, it's coming up. It's actually in the next 30 days, less than that. The next few months are going to be crucial in deciding whether Bitcoin sticks to the old 4-year script or writes a brand new one. Now let's talk about why this cycle already looks different. First, we saw something unprecedented. Bitcoin hit an all-time high early before the halving. That's never happened before in Bitcoin's history. Secondly, we've had months of sideways grinding price action. Since then, we've had a third of the volatility other than the tariff talk. Now, Bitcoin's signature trade has been at historical lows. This market is coiled up tighter than it's ever been. And if you know anything about markets, you know that coiled markets do not stay quiet forever. Like a beach ball underwater, they are about to explode up. And then there's the interest rate story. If you go back to 2018 and 2022, both major bear markets happened while the Federal Reserve was hiking interest rates. Higher rates pull liquidity out of the market, and risk assets like Bitcoin tend to struggle. But this cycle, it's been different from the start. Right now, we're at peak rates, and the market is pricing in a 93 to 90% chance that the Fed starts cutting rates this September. That's next month. When rates go down, liquidity loosens up, capital starts looking for places to put it, looking for returns, and Bitcoin, with its unique mix of scarcity, volatility, tends to soak it up like a sponge. So here's the big picture. We're standing at the edge of a potentially historic run, but the forces driving it are shifting. It's no longer just about the halving, it's about macro policy, global liquidity, and Bitcoin's place in the broader financial system. Whether we get that parabolic move in the next 90 days, 30 days, or we enter a whole new market structure, the decisions you make and the patience you have right now could shape your financial future for years to come, generationally. This isn't financial advice, but I'm giving you some news. So I want to hear from you. Do you think Bitcoin will still follow the 4-year cycle? Or are we officially done with that? Is this a new era? Drop your thoughts in the comments. That's your Daily Hodl for August 9th, 2025. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one.